Hey guys, how's it going?
All right. Hello. Thanks, Scott. Hello, Andy.
Hello, Steve. Hi, Scott. And hi, everybody out there.
Are you avoiding those tornadoes in Texas?
Oh, dancing around them. It's
All
all,
right.
all clear now, I think, for a while.
There you go. That's always fun, I bet. All right. Hello, everybody. Thanks for tuning in to the recurring webinar on Tuesday, Trade of the Week. Real quickly, let's just go through some of the requisite slides that we usually do as some of the regulars pour in here a few minutes late. The old disclaimer, we are a software as a service provider, a subscription provider, and we are not registered investment advisors. We're not brokers. We're not here to tell you what to invest in or what works best for you. That all has to go to the smart people who took the right tests to charge you a fee to tell you that stuff. We are just going to go through some ideas here, and these are our opinions only. So anything you see or hear in this webinar really cannot be construed as investment advice. All right, good. We've been around for about 15 years now. Very in-depth product, many different versions coming out on top of each other, each with new features. And it's a very feature-rich program, and it's not really something that you can learn in just a 5-day test drive. A lot of the people that take our 5-day test drives continue on for another month to continue learning about the abilities. It's really hard to just kind of scratch more than just the surface on a 5-day trial. So we have a lot of services available to try and get people up to speed as quickly as possible on the learning curve in using our product and understanding what the capabilities of it are. Primarily, the live trading room here with Barry. This is an old screenshot of his room. There's about 400 to 500 people in there every day, and the best part about it is it's free. Free is always a great price, especially when you consider the content level of what's going on in that room. There's a lot of people charging money for probably less than what we're giving away free. So if you're not a part of that free live trading room, and Barry sharing his desktop and following the 5 or 6 traders in there that really kind of grab the bit and take it for the day in terms of what the room's focusing on, and a lot of good traders even helping newer traders with patience and answers in the chat. It's a great place to hang out. So if you're not there, you should ask yourself why. Just one of the ways in which you can learn the product even faster. And then we have the afternoon webinars, such as now. Every Monday through Thursday webinar is pretty much theme-based. Today we're going to go over the trade of the week, which is the email that goes out Monday morning with a swing trading idea, either garnered from the AI or from the discretionary group here, led by myself. And we'll talk about that. Tomorrow is the Q&A, where Dan and Brad talk about things that are coming around the corner. And then Thursday, Andy will give a synopsis of what happened on the day of Thursday. We don't know until it happens, and he'll come up with some great content as usual. But then Friday, we don't have these afternoon webinars. People are off into the weekend mentally, so we have a morning session for 3 hours, which is open to anybody, and there's no pre-ordained content that we go through. It's basically, hello everybody, what do you want to talk about? And so that's a great way to get one-on-one visual demonstrations of what you might need help with, or what you're not really sure about, or if you've got any confusion, please come by those 3-hour Friday support sessions. Can do a world of good in putting things together for you that you may not have put together. And then lastly, you saw that TI University. I just did the 201 class this morning. This curriculum repeats every week on Monday with the basics, Sean and Andy, and then Tuesday a bit more in depth, and then tomorrow with Andy, he's going to talk more about back testing and how to refine some back testing strategies. And then the Thursday edition with Jamie is more advanced stuff, and I imagine even we'll start to get some brokerage plus auto trading stuff packed into that day's content as well as we go forward. But another great way in which you can pull up a chair for free, not pull any money out of your wallet, and learn about the product quickly. So we are here every Monday through Thursday. For those that really want to get a head start, you can always ask info@trade-ideas to email you the 4-part YouTube series, the video that basically covers all of this that we do live and repeating every week. I mean, we could do it in a evergreen type format, but we're there and we're available, to speak with for an hour and a half each one of these days. All right, so man and machine combined, always the theme of my week. the brave new world we're stepping into is going to be full of a lot of AI and machines that are going to do some of the menial work for us. And what I mean by that specifically is especially big data sets. If you work with big data sets and you're a human being, you're going to be getting circles run around you here pretty soon by AI. So that fits perfectly with what we do in the financial industry. AI is coming into the medical field, the sports betting field, what have you. Wherever there's big sets of data, the AI can really help out. And beyond AI, our technology in itself can really help out, because that's what we're really all about here, is using this platform to look at a fire hose of data, which is 7,800 stocks in the US markets on 4 exchanges, and spin that into a curated list of ideas that fit what we're looking for in our time frame and our risk management. And that's what we use Trade Ideas for. So we'll get into some more of that here as we get going. The agenda for today, the 21st, market recap as usual. I'm going to call it No Man's Land is the theme today, and you'll see why. Holly recap is got some. Andy has some ideas. Andy, actually, Kyle is asking about the recording on YouTube. Maybe you go ahead and drop that into the chat, because if I'm going to tease you guys with it, we might as well.
Recording of what, Steve?
The 4-part series
okay.
via Trade Ideas University.
Yep.
Yeah.
I'll grab it.
I'm going to tease you. We might as well drop it in there. Trade of the week was a gold mining stock, and we'll talk about how we came to that, why it was a gold mining stock. And then I've got a new alert for day trading. I'm not really a day trader. I prefer swing trading, but do some day trading every now and then. And I've got an idea for an alert that I'm kind of refining. I'll show you some of the wisdom behind that. I guess, we need to go over the alerts that were set last week, Andy. They worked pretty well in a volatile market, so we'll revisit those. And I got to be honest, I don't have a curated list of ideas today. It's been a busy day. I haven't had a moment to do that, but maybe we'll go through a few scans together and take 10 minutes and see if anything pops out. And then we can set some alerts together. And I don't know if we'll have time for chart requests, but if we do, we'll let you know. All right, so that being said, let's minimize the old slideshow here and get into the first segment, which is market recap. I know a lot of you guys show up at Jamie's webinar too, so you'll be hearing a little bit of the same stuff yesterday, but I got my pen. For the most part, the story is, as I said, no man's land. Back here was the all-time highs in the SPY. And what happened here this last 2 weeks ago is I need to zoom in so we can really make that point here. That orange line, of course, as you saw, corresponded to the all-time highs. It needs to be adjusted to about there. And what this action showed us here 2.5, 3 weeks ago was that orange line was indeed a wall of sellers, as we anticipated. And we talked about the small trading ranges getting up to this level, and it was going to be a foregone conclusion that when you're in the neighborhood, you're going to stop by and test these levels. Price action just doesn't do that. Price action, once it's got its eye on something, it's going to complete its course. We just don't know how many days it's going to take. And in this case, in hindsight, we can look back and see that it did complete its course, and it banged on this level for 4 days. Each day was an inability to close above that orange line, being prior S&P highs. So price action got frustrated. It had nowhere to go. And after all these little tiny range days and low volume days, like an airplane in the sky, falling out of the sky when it stalls, it starts to shudder and buffet, and then it falls. And that's kind of what happened in this case. And then, of course, we get the bigger volatility candles, and we get the bigger volatility volume popping into play as well. So basically a tale of 2 different markets here going back a month and a half. But and then where did we bounce after all that volatility? Once the plane buffeted and stalled and fell out of the sky, where did it find its airspeed again? Well, right where we would expect it to. Let's zoom out and look at the significance of this orange line. This orange line was resistance. It was tons of resistance back here, back here, back here, back here, and back here. And it became congestion here. So it really only made sense that when the market did fall, right there is where we bounced. We overshot it through the day, but we always like to look at closing candles and not make decisions in the middle of the day. We want to see how the market closes up. And it closed up right at or about that pivot line, and then hasn't really looked back for the most part. We had a little bit of a bounce midway between our range, so let's just call it what it is. This is our range. This is our new trading range, guys, from there to there. And we are in the middle of it, in no man's land. Yesterday I commented a little bit on the mess that's starting to occur here. You know, the moving average crossed over there, 10 period crossed over the 50 there. So it looks nothing like it did back here when we had all our moving averages fanned out and the 10 period guiding the price higher once it got to its point, its objective, and then the sellers stepped in. So now what we have here is just kind of one big hot mess for the most part. So we're just kind of taking it day by day. I mentioned yesterday in Jamie's webinar, these topping tails were not concerning, but they were worth noting for the most part. The price couldn't get above that 10 period and fell back below. Well, today it proved that's not really an issue. We popped right back above this moving average, but again, there's just not much to really discern what's going on here. This is a hot mess in the middle of no man's land. So we now have our trading range, 280, 281 we'll call it, up here to 294, 13-point SPY range. We'll see how it resolves. I want to also show you again the intraday, how important the intraday is. You guys know I only like to use one indicator on my intraday 15-minute chart, which is the 10-period moving average. And yesterday, as we would expect, it was the guiding hand that kept the price in check for the most part, except for this little slop in the middle of the afternoon here. And then definitely check the price there, and check the price all the way into the close. Today, a complete mirror opposite of what we had yesterday. We had what was called, I call a horseshoe opening, gap up, can't fill the gap and go to highs, starts to look like a horseshoe, always very bullish, but then it was confirmed as we got midday. Once again, 10-period moving average on a 15-minute chart is going to be the guiding hand. And if you're a day trader and you're trying to gauge, you know, what the general market's doing, and you're long, you really want to wait for a closing candle, which didn't really happen until here. These candles were close, but they still hung on at the closing end of the 15-minute range. But then the last 30 minutes of the market, we lost our momentum line, the 10-period moving average, and fell down. So I wanted to highlight the importance of using this as a guide during the day to judge momentum and gauge momentum, and when that momentum is intact and when that momentum actually stalls and fails. So interesting to note, the last 2 days were kind of a mirror image of each other there. What else is of note, I think? Let's go back to our daily chart and go to our NASDAQ. NASDAQ had a tough day yesterday. For some reason, the banks yesterday were really strong and kept the S&P closer to its range, where the NASDAQ kind of got a little bit lower and popped down more than usual. Today it was up 1%. Let's look at the S&P, was up 0.9. So the NASDAQ gained back, the Qs gained back a little bit of what they lost yesterday by not having a lot of financials in their weighted mix. But same story here, for the most part, kind of no man's land. Let's zoom back out. You know, our prior high, you can actually redraw this in the NASDAQ Qs, was right there. And so when we fell and broke below that line, you know, same thing kind of happened. Volume kicked them down here, volatility, our candles got longer, our ranges got wider. And when this kind of stuff happens, guys, you know, if you're trading 500 shares in certain stocks in this kind of environment back here, when we get into this kind of environment, you should probably downsize to 300 shares, because the only thing you can control, you can't control price, you can't control volatility, but you can control your share size, and that'll sometimes help you stay in trades longer when the volatility and the candles get longer and wider. So downside in the Qs, let's take a look at what's going to be holding the Qs up. Perhaps it seems as if, looks like that, as I mentioned yesterday, I'll overlay it with the orange line, but that's also the swing exit stop. See if I can move that. You can see that red line. It's already painted in there on our Trade Ideas charts to show you this is probably a significant pivot level, and it was. It certainly held that day. Looking at the congestion from back here, but for the most part, same story in the NASDAQ. You know, crossing over on the moving averages, just kind of a hot mess on the moving averages. And for the most part, this is our range in the NASDAQ right now, and we're right in smack in the middle of that range. So that's why I came up with the theme of no man's land today. For the market recap. And a quick look at the IWM. This one has been kind of the canary in the coal mine. It never really got back to its respective highs. So I mean, look at all this distance that, you know, the NASDAQ and the S&P pretty much achieved, but the Russell 2000 of small cap stocks couldn't quite get back to their prior all-time high levels. And it's just telling us that this is the weak link right now. The small caps are not really sure about what they want to do. The big caps and the FANG stocks are driving the indexes higher for sure. But we're going to be keeping an eye on this, and the bounce has not been very not been very solid. So our range in the IWM is more like this. And as you can see, yeah, we're kind of in no man's land, but we're definitely close to the bottom end of this range, more so than the other stock indexes. And then lastly, your father's Oldsmobile, the old Dow. Same kind of story. In this case, it looks like the 200-day moving average is providing some stability and support, as well as these pivot levels back here, which I'll draw for the moment. And then also all-time highs in the Dow are way up here. So there's our range for the most part in the Dow. Again, all four indexes showing us the same thing. We're in no man's land with a bit of a hot mess going on with the moving averages rolling over and whatnot. So, when we see some more definitive type of setups, maybe there'll be some more conviction or bias to the upside or the downside. But, there's no reason, as Sean would say, we are still in a bull market. And how do we know that? I'll go back to the SPY to demonstrate that. We are still in a bull market because the lows are higher lows, no matter how you slice it. Higher lows, right? No reason to think that we're going to turn around and become another bear market. Now, I did make a lot of mention up here that something was going to happen when we got to those highs. And it's very unusual for stocks to expend all their energies and then just slice through like a hot knife through butter like it's nothing and just keep on its way. This is healthy is what I'm trying to say. What we've just had is very healthy in the scheme of things. So we'll see how it resolves. You want to add anything there, Andy?
No, man, you covered it, pretty well. We are, like I said, I think you gave it a good topic, no man's land. We kind of are in no man's land, pinched between a bunch of moving averages, and we'll see how it plays out. Yeah, everything you said. Yeah, there's no reason. We have a lot of content for today, and there's no reason to pound along this a lot. But yeah, you hit it.
Let's move along.
Okay. You want me to go ahead and dive into? Okay.
Yeah, let's do it.
Ollie, all right. All right. So.
Got it.
I don't know, something just triggered. All right, guys. Wow, impressive day for Holly and Steve. I don't even know. Do they have access to this full risk yet on their version?
Since I'm running kind of an older version, it's not really up to speed. I think they might.
Okay. Well, if you haven't seen it, you will be seeing it soon. I don't know. I don't have it yet. Waleed would know. I guarantee you. If you do not have the full risk, so this is going to be fun. I don't know if you. Friend says I see. Don't think we do. All right. So. Guys, this is kind of what I've been wanting for a long time, and we finally have it, and you will be having it soon. I don't know if they discussed this yet on the Wednesday webinar. Probably they haven't, but I am going to walk you through it today after I talk about and brag about what, an incredible day the old nag had. We call her the old nag around here, the traders do. That would be Holly Grail, the one that's been with us now for over 3 years. These two were added, I guess, in the last year. But this is the old nag's been around for a long time. Well, she really, showed her today, man. She still got some kick in her, man. So, but as you look up there, not only do you see risk off, not only do you see risk on, now you see full risk. And basically what this is the old risk on, okay? Basically, no exit reasons apply, even stop hit. This is staying in the trade, whatever alert comes out, staying until the full length, 5 minutes before the bell, whatever it gets out at. So I did pull up a column to show you guys in my trades blotter here. Okay, I've pulled up the full risk column, so now you can see risk off, risk on, and full risk. Now, where is this going to make a big difference? Obviously, if there's any exit reason besides stop hit, all these will be identical. Okay, obviously, because risk on will continue to run until there's a stop hit. You can see when a stop hit, okay, or even if it's after, in other words, if it's after the trade exited for whatever reason and it goes down to the stop price, it will freeze, okay? So it's basically saying, we're not, you know, it's not fair for us to count it to the upside if we're going to quit counting it to the downside when it goes against you. So risk on now is, well, and it's been this way for a while. Once your stop is hit, okay, it freezes in risk on as well as it does in risk off, okay? Whatever the exit reason is, it's going to freeze in risk off, okay? In risk on, if it goes down to the stop level, okay, it is going to freeze at that level. It doesn't matter. If I take a look at this TGS, you're going to see hit down here, had a nice little bounce, but it was frozen. It did not tally that going up anymore. But as you can see, this is a great example, this DFFN. Look here, barely got stopped out, okay? Reduced risk, I'm sorry, no, it got stopped out for 200, well, that's based upon mine. Basically, it's just a stop hit. Looks like about a 25-cent stop. But you can see in risk on, it froze because we do not, once it bounces in risk on, it doesn't matter. The stop level has been hit, it froze. But look here in full risk, okay? It's going to continue to tally it for you. So this is going to be just an extra little thing you can kind of keep track of, guys. So in other words, if you find, you know, if you are trading Holly and you find yourself getting stopped out a lot and you look over here and you're noticing at the end of the day, it's like, wow, man, I keep getting stopped out, but this full risk column sure looks nice. Now, I'm assuming this is going to run against you. I'll have to see how that works on a stop hit. But anyway, this is basically going to run it, whatever alert fires all the way to the end of the day and give you the full tally with basically no stop freezing. It won't freeze anymore. So anyway, that's coming down. I'm hoping you guys may have this in a week or two. Just another, so if you do look up there, once you get it and you see this full risk, you'll know what it means. And yeah, it's going to be a nice little tool to have as an addition to the Holly. And with that said, wow, there were a lot of good trades. I'm not going to go over NEO. You can see NEO on 15 trades was up a respectable 1.34. 2.0, only 8 trades and still not a bad 44 cents. But Holly Grail was hot today, and you can see the Sunrise Mover had some beautiful trades in it. And you can see they're pretty much pain-free. NRG, Signal, pretty much pain-free. Continental Resources, pretty much the same thing, pain-free. Every one of these trades from the get-go in the morning. This one was a good one. VSLR. If you looked at your stock analysis, you would see TAN was at the top today. Okay, if you see this coming through on a pullback, look at this, breaking out of this level. These are the kind of things you need to keep an eye on. Okay, breaking out of a little level right here, no resistance up until this high over here. Guys, you look down, you see your sector analysis, you see the solar sectors are the hottest ones on the board. That is what we call a no-brainer. Okay, and you can see what a beautiful trade. Backed up, let you in, and then pretty much all day long. So, and guys, there were several good ones. This Foot Locker was coming through my bottoming tail. Here's the bottoming tail yesterday. If I can scroll out so you can zoom and see it. Now, right there, you can see what a beautiful little bottoming tail as it was getting close to a multi-month low yesterday. Getting close to this level over here, put them in a nice bottoming tail. You can see it did it right here as well. You had a couple of crosses here and then boom. Well, it was coming through my bottoming tail alert today, and look at that beautiful entry all day. So I could go on and on. We'll go over one more, this THC. And this one's a little bit messy. Okay, it's a buyer stepping in, so it's kind of a pullback alert after a nice move this morning, but you can see it was messy for a while before it finally kind of broke out of this level, went higher. Holly actually got out of this for reduced risk. When she sees action like this, you know, and not going anywhere, she exited, you know, pretty quickly. But risk on, you know, if it didn't really get that close to the stop, about 10 cents. On a 25-cent stop loss, that's not that bad. And finally got going there. But some beautiful trades today from the old nag, and I'm quite proud of her. But Steve, that's about it. I definitely wanted to show them the full risk. I think it's going to you guys can add it to your columns there, and yeah, it can.
Yeah, because as soon as they see it
you.
pop up on their screen, it's going to become something that we have to talk about. So might as well head it off at the pass.
Exactly. Well, not only that, you know, if you have it up here and you can see those ones now that get stopped out, instead of freezing, you can have that third column up to see when they start, you know, getting better. So maybe you might want to take a second entry or something like that.
Right.
So
THC,
right.
too bad Tenant Healthcare took that symbol. I bet a weed stock would have loved that symbol.
Oh, don't you know it?
Yeah. It probably sent some letters. Hey, can we have your symbol?
Oh yeah.
All right. Well, I'll take it back over
to
here.
You.
Thank you.
Okay, go right ahead.
Get all the unicorns off my screen here.
Yep.
All right. So now we're going to talk about the trade of the week, the concept of the webinar. I got to tell you guys, one of the reasons we went with a gold stock this week was let's just go back to what did the spiders look like? 1, 2, you know, it looked like basically that right there. Kind of a rejection. We were heading back down lower, yeah, and but that doesn't mean anything. What meant something to us was the normal scans that we look at. Man, the cupboard was bare. There was just not much in there. Some of these scans I usually go to were actually empty, and I kept thinking, is there something wrong with my feed here? I mean, real time and making sure I wasn't in history mode or something. So I was really scratching my head, and so you know, all the genesis of this idea really came to was looking at what did the market look like going out last Friday. So let's take a look at the history feature using our top list feature. We'll do my California West Coast 1255. Last 5 minutes of the day going into the weekend when this really was all the information we had to create the trade of the week. I'll click OK. And we scroll to the top, and what do you see? We see gold miners. Everything else was pretty much red for the day, but gold miners. And typically that can mean you know, the big money managers and the hedge funds starting to get a little nervous when money piles into gold miners. It's kind of a defensive play. And again, looking at the way the 2 rejection wicks happen on Friday and the fact that all of our scans were completely bare, we were kind of left to go into discretionary mode for the most part. And this was the idea behind it. Where did the market go out on Friday? Went strong with the gold miners on Friday, hands above the rest in terms of that. So one of the major staples of the gold mining industry is Newmont. I probably looked at, you know, 10 of them or so, but Newmont really looked the best. Why did it look the best? Well, it had a nice base down here, a really strong base. Numerous attempts, let's grab my pen, numerous attempts to try and run the stops and run it lower, but they just couldn't do it. And when you see them knocking on the door a few times and they're not getting any further downside movement in that direction, which the direction was down, we start to see a rounded saucer bottom develop here. So that was the first part, a rejection of any sell-off down there. So the price really has nowhere to go but pop back up. And what it did was pop back up, and it rode sideways across that moving average. So I've seen this song and dance many times in my 35,000 hours of watching price action. When a stock bases like this and doesn't really bounce quickly, but just kind of goes sideways and waits for these moving averages to catch up. I call that the bird in the hand. It's just kind of waiting for it, hopefully, to take flight. Now, last 2 days, it did trigger right on the open yesterday, and it's been waffling back and forth. But when we get to the end of the day, we have 2 green candles that are still above the 20 and the beginning to be flattening out 20, and the up and coming 10 period. The old 10 period works just as interesting on daily charts, in my opinion, as it does on intraday 15-minute charts. And so there's really no harm, no foul. This thing is setting up okay. It's not giving us any fits or any difficulty. I mean, for the most part, I think the entry is, let's mark it up, it's right around there. Actually, maybe a little bit higher. So it's just kind of going through the motions here, hopefully waiting for its day. If it has its move, it might come in one big nice day. We'll see what happens. But I feel like it could be coming close. We will see. We're not getting any negative price action on this, even though the market kind of recovered a little bit. It seems like the bigger investment houses and money managers are seeing the same thing, a nice big rounded bottom here. We're in no man's land. There's still some uncertainty perhaps, and like I said, gold miners can be a defensive play. So this trade is intact, and again, I think the target was kind of a near-term target. It's not much to ask. It could grab it in one day if it needed to, but this 200-day moving average is, I believe, the target. And so maybe tomorrow we get lucky and we get a nice big green candle right up into that moving average, and we can take some profits. We shall see. But until then, of course, the downside risk remains, as I wrote, always looking for a candle closing below that 10-period moving average. And that would mean we would need a candle to close below this moving average right here and not look pretty. So hopefully we don't get that. Hopefully we just continue to get some of the sideways action, bird in the hand kind of a setup, and then maybe it'll have its day tomorrow or Thursday and a nice big push up that we can take profits into. Okay, I saw Andy handled that question good. So that was really the idea behind the trade of the week. Again, defensive market, nothing looking good on Friday except gold miners going into the weekend, and nothing on the scans, which we would expect with a kind of a hot mess of a market in no man's land. So here we are, and this is the concept. There's always something that can be played. You don't always have to go to cash. Sometimes we do call going to cash when we have some really crazy volatile days, and there's really no point in getting in front of anything. But you know, just in the general scheme of things, as the market does its thing and rotates and passes the baton around, it feels like gold miners might be due for their day in the sun here for a day or two. We'll see.
What is the stop on that, Steve? Is it the swing exit?
It's this, no, it's very tight. It's extremely tight. We want to see the bird in the hand pattern that I call it, my trademark. We want to see that develop. If it doesn't develop, get out. And getting out means a trade, a close below. See, even these 2 days, look at attempted and a push right back up. I like that. This day it attempted, pushed right back up. I like that. This day it opened below, but we don't look at intraday candles. We look at where they closed. And so every day has just been buoyant, for lack of a better term. And enough of these buoyant days, and you might start to get maybe some of the shorts to cover. And I'm just looking for one nice day where we get one big nice candle that maybe we can take profits on and bail. Because I mean, let's face it, this is a downtrend. We're just trying to catch an oversold, some intermediate downtrend. We're just trying to catch an oversold possible pop here. Another question, you can handle that. All right, so let's see. That is the trade of the week. That was the idea behind it and how it came about. Let's see where we're supposed to go next here. All right, new alert for trading. So let's just talk about this a little bit. I've got this little guy here I want to talk about. And again, I'm not a day trader, but been doing a little bit here and there, and nothing really major, but I really like intraday reversals. And we have a event in our alerts that we call the 15-minute hammer. So it's looking for 15-minute candles that are going to have a long tail and bounce back up. So therefore, they're only going to come out every 15 minutes. And I've got this alert here, and I've got it configured for actions. I got a unique sound on there. So since it's hiding behind this window and only updates every 15 minutes, if I hear it, I'll pull it behind and take a look. So again, what it's looking for is 15-minute candles. Now, there's a real caveat here. This was working pretty decent last week, but for the last couple of days, it's been a little choppy. But it's a great reminder to remind us all that we don't sit here and just wait with our hands open and jump into everything that comes through these alerts. It's still a curated list of ideas, and we still got to put it through. I'll start with this one because it was the best one of the day, but more than likely I want to focus on what did the daily chart look like. Was it extended? Oh no, this daily chart was basically a cup and handle. Not bad. So starting at the bigger picture, what does the daily chart look like? Looks pretty decent. And there's our intraday candle. Notice the arrow is to the right, but this is our signal candle right here. You guys all see that's the 15-minute hammer that triggered. And then when I marry that up with the daily chart, that can be an interesting day trade entry. You're looking for reversals because, guys, if you're going to chase direction in this market, you're always going to be last. You've got to be contrary, and you've got to run against the herd sometimes to separate yourself. That's just what it takes. Let's look at the others here. They're big old sell-off candle. So that intraday candle, I didn't like that much. This one probably could have gone either way. It was a decent chart, but it didn't work. So the point is, they're not all going to work. You're going to have to marry them up with what looks interesting. But I did something, I think it was last Friday. This thing was working much better on Friday. So let's just take a quick look at maybe a couple more examples. And I'll do the 6 a.m. time. So this should be Friday. Let's see, it still says loading. Oh, that's why I didn't do it correctly. Yeah, I did. 517. 517. There we go. Here comes the. A lot of stuff was coming through last Friday. I'll have to go back in our candles here. Ah, there we go. So this was right on the open. There's a 15-minute candle. Nice push off of there. I have to do the same thing with each one of these, of course. But there was another interesting candle. I'm just kind of winging it here as I go through, because I think there was a lot better, another nice one on the open. Those are all on the open. Let's look in midday a little bit. Cintas, let's see what that looked like. Oh, that was a nice looking daily chart. What did this alert look like when it came out intraday? Not bad at all. Let the market open, nice big down candle, faked everybody out, and look at that, was a pretty decent entry. So this can be an interesting entry, an interesting scan for maybe 1 hour holds intraday. And again, going back to the thesis of, you know, people don't think about buying a candle that looks like that. They'd rather come out and wait for it to feel safe, and then they chase it up here. Oh, right, now it feels safe. Now I'm going to go ahead and jump in, only to find out, you know, you're the last guy to the party and you're going to get stopped out. You've got to think opposites in this game. If there's any golfers out there, when you hit the ball left, you line up right. It's a game of opposites, and so is the game of trading. It's not a game to be taken lightly if you're one that likes to chase the herd. You got to be a free thinker and sometimes jump in against the grain to make this stuff work. So I'll go ahead and share this. Oh, I forgot to talk about really the wisdom of behind it. If you just run this alert by itself with the 15-minute candle hammer, you're going to get hundreds of them all day long. You're not going to know which ones to look at. And so what I wanted to talk about here is go back to the filter that Andy created, I think it was just end of last year, last fall, called the score filter, the stock composite rating. And in the stock composite rating, we've done all the work for you. What do I mean by that? I mean, you don't have to go into configure and go, okay, well, I want daily charts that look good, right? Okay, we got to be above the 20, we got to be in the 52-week range high. No, forget all that mumbo jumbo. Andy made it real simple for us by just using the score filter, which is right here. All right, 90 and above would be considered an A student, A stocks, meaning we've done the work for you. There's 15 data points in there. I think 10 of them are technical, so they're strong on 10 technical points and time frames, and the others are also, remaining 5 or so are going to be more fundamental or balance sheet related. So by using the stock composite rating and putting in 85 or 90 in the minimum, you're finding the B plus and the A students. You're getting rid of all the rest. This kind of midday 15-minute hammer bar is not going to work in stocks in a downtrend as much as it's going to work on stocks that look like this CTOS, really nice congestion and moving higher. So I wanted to really hit that home. The point is, this score filter can take a lot of the heavy lifting and brain surgery out of the work for you if you only want to focus on strong stocks, technically and fundamentally. Use that score filter. All right, so I'll share it because I'm sure somebody's probably wanting to at least play with this in the next day or two. So I'll copy and drop in the chat window. We'll call this the 15-minute hammer with high score stocks. Paste. You guys can have at it there in the intraday window. Anything you want to add on that one, Andy? How to use that?
No, I think, you know what, I think it would really benefit a lot of people to use that score filter in a lot of your alerts, because you'll find out that if you're looking to go long stocks, you know, it's tempting to be that guy to catch the bottom. But let's face it, in most cases, even if you do catch the bottom, you're going to sell it too quick. So you might as well, you know, try to focus on the stocks that are moving for you in the right direction already, you know, from the lower left to the upper right, and they're going to have typically a good score. So no, I think that was a great idea, Steve.
Yeah, cool. So it's in the chat window for anybody that wants it. Very good. All right, so moving forward, for those that were here last week, I think we did set some alerts. because there was stuff to look at, and this is what they were. Not bad. This coup kind of ran away with it. There's our green line trigger. Again, these are going to be probably strong score stocks, okay? Focusing on strong score stocks. I'm not focusing on something in a downtrend because I think, I hate to throw somebody under the bus, but they gave me a lecture on an email about how, right where that orange line was, about how Tesla was the buy of the century because Elon Musk is God. All right, this guy clearly doesn't get it. All right, he's not paying attention to what the stock price is telling him. What is the score on Tesla? Let's just take a look here. What's the score on Tesla? Tesla is a D student at 45, maybe almost flunking out. Okay, don't play around with this shit. Just leave it alone. Go to the A table. That'll make more sense when the new ebook comes out. But nonetheless, back to coup. Nice trigger, nice follow through. Being a high score candidate probably had something to do with it. 96. All right, you can't go wrong with a 96. Roku, everybody knows Roku. I'll tell you what, Roku might have some more meat on this bone. Look, this is our favorite setup here, whether it's intraday or daily. You got great earnings, the big spike, shorts cover, can't bring it back in. It just goes sideways, and what's it waiting for? It's waiting for the rising 10-day moving average. And the ones that are really strong, they don't even touch it. They are repelled by it immediately. And so Roku kind of had a good day today, closed on highs. I wouldn't be surprised to see some follow through tomorrow on Roku. So if you're in this one might even be one of those day and a half trades and I talk about. Once the stock gets its move and closes on high, that's your day one. Day two, more follow through from the morning, and then lunchtime starts to appear and the short-term traders start looking at each other, trying to see who's going to run for the doors first, and then we might get a midday reversal. So that's why I like to say, once the stock is in motion and making its move on the daily chart, try and see if you can give it a day and a half. After a day and a half, all bets are off in both of our minds. I know Andy feels the same way sometimes. What else? Well, WP. This one triggered and went sideways for a few days, but is leaking higher. Bit of a nice move today, but sideways into the close.
Leaking higher.
Leaking higher. Defying gravity. It's just leaking.
I like it.
And then a couple of little back and forth pod that open the pod doors still might be ready to go. I mean, there's really no reason to take this one off the board. That one still could have a day tomorrow. We'll see. X-ray never triggered, but look at this. It's still intact. So let's actually leave that one in there. All right, so we'll keep that one in there. I'm gonna delete the other 5 that were given out last week. And like I said, I don't know where we're going here, but let's take a trip on down and see what we get. We'll start with the composite rating, which I have renamed the A table. And this is a scan looking for strong stocks that have also a high short float. The one at the top here, MDB, has a pretty high short float. This is kind of interesting, actually, as I look at it. It's got a score rating of 90, so it just barely made the cut. 90 is the threshold here, but interesting little flag pattern. I'm gonna go ahead and draw one here.
Sure.
148, create a price alert at, well, first let's get our number, shall we? Okay, 148 and a penny. Now the idea of this one being a possible candidate is the 30%, the 32.8% of the people that are short this thing need to be scratching their head and wondering who the hell told them to short stocks that are close to all-time highs. And once they realize they're wrong, if this price triggers, there could be some extra fuel that drives these prices higher, which is known as short squeeze. Same kind of thing going on over here, kind of coming out of a nice little flag. Interesting. I don't know, what do you think about this one?
Yeah, I liked it. I wish it hadn't done what it did on the close today, and you could have caught the bar reversal, but I mean, that's one you would almost have to mark up.
Let's come back.
The high of the day.
Well, this one has been fun as well. I don't think we marked that one up, but boy, look at the 10-period moving average dictating the price from below. Sure, I will share that. No problem, since somebody's asking. A table. Not everybody belongs at the A table, All right, so where were we? ENPH is where we last, it's a nice looking chart. I don't know what you do with it here. Yeah, actually I do know what you do with it here. This thing still has 24% people who don't get the fact that it's a few pennies away from an all-time high, and they need to be punished, don't they? So let's punish them. I need to bring my numbers back in. All right, so 95 over there and 15. So 1501 is our new bogey. 1501, and the short squeeze could be on. We'll even add notes. All right, that one's interesting. CTRX. Oh, this one's getting to flag a little bit, but it's really far away from its moving averages. Let's just see what else we got. We don't have to fall in love with everything we see. I don't really like the way it retreated, even though this was one of ours that we set last week, as was Pod. What else we got on here? That's ugly. We don't want to chase anything that looks like that. Pro, I think, didn't we already mark that up from last week? Wasn't that the one that we had? No.
I thought you did, but
where did it go? Did I accidentally delete it?
You know what? I think you know what it was. I think it had like a. I think it had a nasty candle the day you did it, and you didn't like it.
It was X-ray that we left in there. Okay.
Yeah.
That's what I was confusing with. So back to
Pro. I think Pro had that red candle, and you did not like it last week.
Well, I'm starting to keep like it because it just can't find a way to sell off and fill in this gap down here. And the longer the sideways action, if you get a resolution, watch out. So notice the grading here that Trade Ideas has drawn for us. That's a significant level, and we're going to use that level for our price alert. Long trading sideways range could resolve soon will be my notes on that one. ARRY, we're going to stay away from that. Nothing really I like about that. Now, we liked Roku, but that was from last week, and I don't think we're going to jump in here and chase new highs now. This thing will probably gap up, and it goes back to my day and a half sermon I said a minute ago. This would be interesting, I think, if the moving average was touching it, right, Andy? The moving average is right up there holding that. There's still too much space in here for me to guess. And then Coup, well, that was one from last week, pretty good one. That was our breakout level from last week in Coup, and nothing really setting up there at the moment. Origin, I don't really like biotech, especially taking home biotech. So let's go back and backtrack a little bit. We didn't do this one, did we? Fate. And I still don't like. I'm gonna fall back on the same thing we just said about the other stock. There's too much space here between. If this moving average was pushing those lows higher, this one might be interesting, but not. So how many did that give us so far? I think it gave us about 4. Let's see, what else could we look at?
You want to put your bull flag one?
Yep, that's a good one. It's your bull flag one, because you made it.
No, that's right.
And it's only got one in there. Let's make sure we're on the right time frame. Yep, only one. This is what we were looking at. Oops, what we were looking at the end of the weekend. A lot of empty. That's nothing. That's an acquisition. Whenever you guys see that gap up, tiny range. This is just an acquisition. They're just waiting for the merger to take place and the symbols to merge. What we should look at. Let's look at Let's Go Fishing and see if there's anything that Let's Go Fishing are stocks that have been beaten up in a downtrend, but are still very strong fundamentally. We're looking for downside trend breakers. That's it for that one too. So it seems that some of my go-to scans are still a little light. Let's see, let's do one more. We'll do a pullback. The pullback to the 20s can be interesting sometimes. Where are you? Pullback to the 20. There you are. And there's only one in there as well. And it's kind of a goofy looking stock. I think I'm going to call it, that's it. So let's go ahead and share the price alerts that we did create. We're not going to stuff a whole bunch of them in there just for the sake of putting more than 4. While I'm sharing this, if somebody has a couple of charts they want to look at, we can look at a few of those before we bring Scott back in. And it always helps to know if you're long or short or thinking about getting in or what your ideas or positions are. But here is the swing alerts for this week. I'll drop that into the chat window. All right, Kyle has a good question. Have you thought about coding right-click functionality to set one-click price alerts so you don't have to manually input the price level? Well, if you are trading through Brokerage Plus, right-clicking can bring you right into that. You just right-click here, OSTK, and then what's that? Go ahead.
Well, no. First of all, you can do one-click price alerts. And Steve puts them in manually because he wants to get to the exact penny. But you can anytime you want to. That's all I do is I click and just set it real quick. I think he's talking about you physically going in there and putting the price in there, but you're doing that just because you want to get it to the exact penny.
Yeah. Well, let me show you something. Let's bring up one that we. There's a way in which once you've set it, you can adjust it. So let's look at one of our price alerts here, an X-ray. I can grab this. You see my cursor changes right there. I can hold my left mouse button down. I'm not going to move it, but I can hold my mouse button down and drag it up or down, and I can manually move the price alerts in the chart. But
show them how to do it just like the low end of that X-ray range or something like that. Just put one real quick without putting the price in there manually. Show them what I'm talking about.
Okay, so we just kind of go in here, right click, and then price alert, go.
Yep, there you go.
Just kind of eyeball it.
Eyeball it. Yeah, you don't have to get it exact. He likes to get it to the penny for everybody, and I can see why.
Yeah, when I'm doing that, I want to make sure I get it right to the penny. But you can also move those lines if you want. Cool.
Okay.
Got it. All right. So the floor is open. Does anybody have a couple one? Hal's got the FTDR alerted at the end of the day, so he's not in it. FTDR, I take it. FTDR alerted 4167. Oh, I see what you're saying. It popped up out of this. Honestly, I don't like the daily here. Once I see 4 or 5 candles to the green side, just one candle usually isn't going to be enough. It's going to need another day or two to settle back in. I would probably be one maybe eyeball right about there. It's a good example of what we're going to do. Since we don't know what the price is, I'm trying to anticipate where this moving average might be. So if this one wants to fall back into this general range, I can just type in here pullback, question mark. Oops, and set that alert for a pullback alert. But there's a little too much open space in here for me to like it at the moment, and I'm sure Andy agrees with that.
Mm-hmm.
All right, I only shared one alert. Is that the case? I don't think that's the case. Maybe I did. Just in case he's correct, let's redo it again. I might have forgot to scrape all of them, but we'll do it just in case. So price alerts. Yeah, I probably just did that one. Thank you for pointing that out, Frank. Right click, let's do this again. Share 4 selected price alerts. Copy all. And 4 selected price alerts is what I will type this time and paste. My bad, user error, it happens. All right, anybody else have a stock you want to look at before we bring Scott in? We're just about at that time of day. Doesn't seem like anybody did since I mentioned it a few minutes ago. So let's go ahead and say that was a fun conclusion to this week. Let's bring Scott in and he can talk about some of the announcements we've got coming around.
Mm-hmm.
Thank you all. Thank you all.
Yeah, that sounds good. Just to remind everyone, we have a podcast with new episodes out weekly. So search for Trade Ideas Podcast in your favorite podcatcher where you listen to them in and add us as a subscription. Check out the back issues for some guest episodes too. There's some good stuff hidden back there. Also, we have an ebook that's been out for a little while, trade-ideas.com/ebook. If you don't have it yet, get it. Both Steve and Andy contributed chapters to the ebook, and it's got 5 chapters. Each chapter has a way to help stay in the black in a post-BTFD market. So go ahead and take advantage of that. It's free. It's good. Take it. We have got a discount code for you that's good for the rest of this month, which means not too much longer, about a week. So use Spring4Holly, all caps, as it is on your screen, to save 15% off the first month or year of any subscription. You can also use this to upgrade from standard to premium, so don't miss out on that opportunity if you decide you want to upgrade your service to premium. If you want to follow Steve on Twitter, is @TodayTrader. We also have @TradeIdeas, @QuantBot, a couple of others. Facebook.com/TradeIdeasPro is the Facebook page to follow and like and share stuff from. info@trade-ideas.com is the correct email to send your questions to, because that goes directly into our help desk software where the appropriate team member will be answering you. We'll have a recording of this up later on tonight or tomorrow, and you get an email reminder about how to find it. Thanks, everyone. Thanks, Andy. Thanks, Steve.
All right. Thanks. See you next time.
Thanks, everybody. See you Thursday. Bye-bye.
Bye.